late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today I'm going to dive into a topic that a lot of people have been asking me about lately, kind of my plans, my strategy, as well as my thoughts on the overall market structure. You know, looking at some different indicators that other people might not necessarily be watching as closely in the space, just to get a better idea of what's going on. We want to be prepared for any outcome that does take place. So without further ado, we're going to jump into the charts here. So we're going to take a look. Initially, I want to start off over here. So I've shared this chart with you guys in the past in prior videos. The price of Bitcoin at the time was actually 97 or about 97,000 US here. So I pointed out some similarities in the cycle peaks from prior cycles. So right through here, we saw this bearish divergence forming here. So that's that lower high on the RSI and that higher high on the price action right through here. And then so similar thing to over here, we saw this higher high on the price action, but we saw that lower high on the RSI showing that bearish divergence similar to over here, lining up perfectly with these two right around the peaks, similar to what we saw over here. Also looking at our big money buy indicator. So looking at this, we see that the majority of people, kind of the big whales, did most of their accumulating in the bear market through here, similar to over here. Once they've had those positions, they essentially just held those, rode them up. Maybe they added buys along the way, but not in the same sense that they were accumulating down here. So that's one thing to note, that the whales were accumulating early in the cycle. So when we get to these peaks, these times of overextension, the people that bought down here, they're going to start selling and taking profits, because if you think about it, you're buying Bitcoin at about $15,000 to $20,000 per coin. The price goes up to $109,000. So you're looking at like a 5 to 6, or even more times move. So 500-600% returns in the span of a couple years. That's really good returns. We saw the spot ETFs being launched this cycle. So a lot of traditional finance investors getting involved in the spot ETFs, you know, they're not really used to those kind of returns on such a short scale. So even from the launch of the ETFs, price went from about 40 to 44,000 up all the way to 109,000. So still that over 100% move for some of the tradfi investors. So when we start to see signs of weakness in the market, it's not unheard of to see those investors really start to take profits. I showed you that in the past couple days with the Bitcoin ETF outflows. We did start to see major outflows for the first time in a while in the Bitcoin ETF. That signals to me that the early investors who kind of got in down here right before the market really pumped when the ETF launched, they're taking profits. They might see some warning signals, some of the similarities that I see, and then just, you know, securing those profits, not taking the risk of round tripping that to lower targets. So we did see, after I posted this, within the next 3 weeks, essentially everything just started dumping out. We saw Bitcoin drop to 77,000, so we protected ourselves from a 20% decline in Bitcoin. We de-risked all our highly leveraged positions, all our risky altcoin positions, anything that I didn't have conviction in on the long term. I de-risked it, you know, a lot of it in profit, and then we're sitting on a nice cash position here, just waiting for the market to tell us what's going to happen next. So that's kind of what I want to get into, is we're not really sure what's going to happen. I see a lot of people are focusing on traditional cycle top indicators. So this is just a broad look at kind of a lot of the indicators. I've talked about these before on Into the Cryptoverse. So looking at these, you know, we haven't experienced the same kind of euphoria that we saw in the prior cycles. I do have a thesis that we could potentially not see it this cycle. It's really going to depend on the macro side of things. So what the S&P does, we have continued escalations with tariffs. Trump's back, tariffing everyone again, more global trade war escalation. We've talked about that in the past. We know the potential impacts of it. Rising inflation, increased consumer costs, and kind of a decrease in production. We see that GDP estimates are coming in really bad for the next meeting, so that's another thing to keep in mind. You know, employment numbers showing a little bit of rise, a little bit of concern there in some of the numbers. So we have to pay attention to all these different factors. So what I'm seeing is basically everybody on Twitter or on X is watching the same cycle top indicators. So they're watching all the on-chain metrics through here. So that's like the Puel multiple, the MVRV score, the MVRVZ score, looking at risk, all these different indicators. That's what they're basically counting as what's going to call the cycle top. I kind of look at it from a different perspective. So what gave me these signals here was just the bearish setup similar to prior cycles. It showed me that we were losing momentum, we were well oversold, we had that bearish divergence likely due for a bit of a downtrend. Even if it was just this little correction in through here, we don't want to be caught in that. That's a 50% move to the downside, really going to be discouraging. And then if you bought up here, you ride it down here, you don't have any cash to buy the dip, you're stuck just waiting for price to get back to your break even point, and you might even just sell right here as it gets back to break even because you think, oh, you know, I got out of that 50% loss, I just need to cut it when I get the first chance. So it did kind of play out there anyways, going into that bear market. But the entire thesis I teach you is we avoid buying into these peaks, into these over extended natures in the market. So we saw very overextended on the RSI, very overextended on the RSI, and very overextended on the RSI, as well as the MACD, and we see our DMI also showing kind of bearish signals. So to me, that was enough signals to warrant kind of backing off a little bit, de-risking, replenish that cash position, and then be able to take advantage of the dips as they come. We saw weakness in the stock market, so that's kind of also what supported this thesis. You know, if Bitcoin looked a little weak, but the stock market still looked strong, I would be leaning in the camp that it's just a regular bull market correction. You know, it is not uncommon in these bull markets to have 20-30% corrections throughout the whole parabolic move up here. So we saw pretty much all these, like this little pump here, there's a little correction there of like 20%, same thing through there, through there, through there, and through here, about 30%, and we also just went into a 30% correction now. So we need to determine whether this is just a regular bull market correction or if this is the start of the downtrend going into what could be a bear market. So a lot of people assuming that we don't have the chance of going into a bear market because these indicators haven't necessarily flashed to the same extremes that they have in the past. So if we take a look at the Puel multiple, I mean, I've showed you guys these as well. I kind of argue they have a bit of a downsloping trend line here. So someone could make the argument that these don't get as extended as time goes on, as the asset class becomes less volatile. So you have diminishing returns as well as diminishing losses. Maybe we have diminishing extensions in terms of these risk indicators. So the problem with getting caught on specific indicators and hoping that they play out, it can really lead you into kind of a bad scenario. So last cycle, everybody was following a specific model. It was the stock to flow model. Basically, everybody assumed because it had tracked this model for the cycle early on very well, that it was just going to continue tracking, and it basically was calling for $100,000 Bitcoin by that cycle. You know, we all know what happened next. Everybody just holding on to hope of that model continuing to play out. There is this saying that all models are wrong, but some are useful. So these models, they're fine, they're great, but they do break down, they do deviate. There is times where things don't necessarily play out the way they always do. A lot of that could be due to the macroeconomic backdrop of things. So when we see increased tensions of global trade wars, we see kind of weakness in the stock market, we see traditional technical indicators showing us warning signals right through here, then it doesn't matter to me if these warning signals haven't flashed for the crypto specific asset class, because I don't think crypto can durably go in an uptrend if not supported by the macro or supported by strength in the stock market. So if the stock market starts dumping out, really losing support, going to lower levels, then I do expect the rest of the markets to just follow. Bitcoin and crypto being risky assets, when we get into those times, like I say, into a risk-off environment, or we get into a time where there might be a little bit more recessionary risk. So that's kind of one of the outcomes that could result as a result of this kind of looming trade war, is that we could increase inflation, increased consumer costs, less capital to invest in markets. So we might not actually be able to have the same amount of retail, the same amount of new liquidity showing up to the market to really give us that another leg up in the market. So I do argue a lot of these indicators are kind of reliant on that massive influx of retail or of new liquidity. Everyone expecting it to play out exactly like it did last cycle. So we saw in here, this was right around when $1.8 trillion of COVID stimulus was announced, and then we just went on this parabolic move up. So it's not really the same economic backdrop. Like, interest rates are much higher. Consumer credit is consumer credit is pretty high right now. So a lot of people having to borrow money. Interest rates are really high, so the payments on that debt are a lot higher. So just less consumer savings, less available capital. They don't have the excess money to speculate in risky markets. And then especially when you see warning signals like this across multiple different kind of asset classes. So like I said, the SPY as well as Bitcoin, it is a warning signal to me, followed by those macroeconomic conditions that I do argue are kind of concerning at the moment. So until we get de-escalation of the macroeconomic side of things, I think we are just likely to continue in a more kind of an uncertain, volatile kind of market structure here. Everything does seem to be trending to the downside right now, so we really need to see some renewed strength in markets in the near term before we start breaking some of these key support levels. But I just wanted to give my thoughts about all these metrics. So I do also believe, I'm kind of in the camp that things could go either way. We could, go through a little bit of volatility correction, but ultimately get good macroeconomic news or kind of good economic news within the US that could push markets a little bit higher. That being said, we're not going to enter any positions based on speculative news. You know my thoughts. We wait for confirmation. So I just want to kind of just touch on the fact that I'm continuing to mostly sit on my hands. I'm 50% cash roughly. If we do experience a large downturn, I want to be able to take advantage of it. That being said, I recognize the potential for kind of governments to intervene, de-escalate things, and then markets can continue climbing up in the near term. But the charts are going to tell us when that is the most likely case. So I'm going to jump over to the Bitcoin chart here. I just want to look at this. It's a new indicator, or not a new indicator, but one I haven't showed you yet. It's called the parabolic SAR. So basically we see in uptrends, we see these white dots forming underneath, supporting the uptrend, and then we start to see these white dots when they start forming on top. That's basically the signal that a downtrend is beginning. So if we look right here, we can see that a few times throughout the cycle after these extensions of the 50-day. So I'll show you just compared to the prior cycle right now for a little comparison. We see basically we broke above our 200-day, held it as support. We had our first parabolic extension to the first peak, and then we see the parabolic SAR flipping from the bottom to the top, showing that signal or that likely downtrend. And then that was like a 55% drop in the middle of the bull market. We then see it flip to the bottom, so we get an upside move here, and then up here ultimately again flipping to the upside and causing this downward price action. So we saw one bearish cross of the 50-day and 200-day, two bearish crosses of the 50-day and 200-day, and then a rejection of the 200-day buy price action right through here. So what I'm watching for similarities over here, we had our breakout of the 200-day, holding it basically as support through here. We start our first parabolic leg up. We have our first correction, mid-cycle correction, major one, and then we get our next parabolic leg up to the second peak up here, and then flipping into that kind of upwards parabolic SAR right here. So that's a bit of a warning signal, similar to over here. Kind of where those first printed was pretty much right around the top. So we need to be aware of that. If they do continue to keep printing to the downside, that's going to force price action down. We also see our 200-day moving average starting to curl back over here, so not what we want to see. And we see our 50-day also curling back over. So what I'm watching for, we've had our initial cross, bearish cross of the 50-day, 200-day. So looking here, if we do have another bearish cross of the 50 and 200-day moving average, we're really going to need to pay attention because we have to maintain those moving averages for a macro uptrend. If we don't and we lose both these moving averages, similar to over here, we break below and then we retest. If we reject into that 200-day moving average, that basically signals to me it's a dead cat bounce. We're likely due for a major downwards consolidation phase. but we will just look at a few other indicators here to get a good idea of what's going on. So there is levels of support. You know, if we look right through here, we've got all this support kind of in through here of prior highs. So it's not my base case. We pretty much need to hold this level through here. And then we've also kind of got our our horizontal support kind of from the prior cycle. So if we take a look, we pull our support from here and we'll just stack it kind of right there essentially. So there is a decent amount of support in terms of Bitcoin. We need to hold it, in my opinion, and we need the stock market to show some strength. So if we come back here, you know, we could even come back to the mid 60s and retest this support while maintaining that macro kind of cycle uptrend structure. But it's really going to depend, you know, if we come back here and we get this bearish cross, you know, maybe it's just a dead cat bounce into the 200-day, and then before we continue our way back down to lower levels. I've kind of pointed out, we can look at the 786 from the cycle low to the cycle high as a potential target. So if we see a break of this trend line here, you know, I think we're likely to come back and retest anywhere from 36,000 up to about 51,000, and that could be where we base ourselves out of the next bear market in terms of Bitcoin. So it's just something to pay attention to. I showed you guys those kind of signals that did kind of worry me a little bit. We see obviously a little bounce from Bitcoin here, so we do have a little bit of strength, but we'll see if it can be maintained. We'll take a look at the low time frame to get a good idea right here. So this is a swing trade that I shared in my Telegram group. We're currently up in profits. We've moved our stop loss to entry. So really just showing you how even in these downwards choppy price action kind of consolidation phases, there is opportunities for little swing trades here. So kind of playing that bounce off the 200-day and this moving average in through, or the 200-day and the Fibonacci golden zone in through here. But we'll see kind of where it tops out. We want to see continued higher lows for that structure to the upside, but Bitcoin dominance getting a little bit of relief here. We did kind of see a crazy volatile week. So we saw crypto pumping on Sunday, we saw it dumping on Monday, and then we've seen the stock market kind of dumping as well. So interesting to see Ethereum, Bitcoin holding these lows right through here and also holding the macro lows, but still in that downtrend structure. So not really interested in Ethereum at this moment. We want to ensure that we're likely to get into an actual uptrend. So right now that's what we call a falling knife. Looking here, we saw total, we saw total 3. This big pump up, you know, not chasing it up here, waiting for the retracement to our Fibonacci zone, similar to Bitcoin coming back to that 786 with confluence of the 200-day moving average, getting a little bit of support here. The problem now is to be able to maintain this uptrend, we're going to need an insane pump to get above this high. I don't think it's really going to happen. So what I expect to see, you know, is just more kind of consolidation, build out of support. If we take a Fibonacci resistance from the swing low or the swing high to the low, we can see here, I'll get rid of this one just to clean it up a bit. Basically look at resistance anywhere from the 0.5 up to the 786, in which case we see it would be a lower high. We want to see that higher low, another low, or another higher high, and then maybe that higher low right there before we can really kind of assume that the trend has changed in our favor. So we're waiting for confirmation. It's still looking at it in terms of momentum indicators. I'll see here. We see, so looking pretty good in terms of momentum indicators. We'll get a little bit more upside. We'll see where it kind of tops out at. We take a look at the daily charts. The daily chart, we're kind of just have that one higher high, one higher low. So we need to follow this, see what goes on. But this is a similar thing that I'm talking about. You know, we've lost this 200-day, or we lost this 50-day moving average. We're just consolidating in between it. If we lose the 200-day, backtest and reject, that's downwards, downtrend price action. I don't want to be in any positions at that time. That's why right now I consider this like no man's land or sitting on my hands, because we don't have confirmation of an uptrend and we don't technically have confirmation of a macro downtrend. We're just sitting at this kind of purgatory zone in through here, waiting for more signals from the chart because we don't want to take excessive risk. It would be different if we had a better macroeconomic backdrop right now. We could look at potentially getting a little bit more aggressive with some of these positions. I mean, that being said, there is nothing wrong with dollar cost averaging into your conviction positions. You kind of have to come up with your own risk strategy. So for me, I would rather just wait for that confirmation of trend, get on the right side, and then take advantage of those trends, as opposed to potentially buying into that downtrend and then having it lose support, ultimately bleeding lower, and then we're just gonna have to cut that at a loss. So it's all about risk reward, in my opinion. We'll look over at others' dominance, see what's going on here. So we did break this high right here on the daily. So we've got a higher high, a higher low. We need to see those continued higher highs and higher lows to print for that potential for that uptrend to ensue. So nothing really happening. We want to see uptrend structure before we start to take positions in altcoins. You know, it's hard to hear. You're not going to perfectly time the bottom, but you're going to take on a lot less risk by waiting for that confirmation. So I just want to show you over here, looking at the SPY, which is kind of red for the day, had a big kind of big drop here early on down to that 200-day moving average, but it's still showing to me this is bearish momentum as long as that negative DMI line is pointed up, supported by the ADX. So that points to me that we're likely more downwards price action on the daily. If we take a look at our weekly time frame, also quite just neutral right now. And the MACD is actually more overextended than neutral in a bearish setup. DMI slightly bearish. So that's what I'm watching. I want to show you here, just looking at prior examples. So this is the same thing that I talk about, that bullish and bearish cross of the 50 and 200-day moving average, supporting different kind of trends. So we see it right through here. We got our bullish cross. Price was able to hold above it. We went on our leg up all the way to this peak. Once we had our bearish cross, look at this correction here, 20% down to the 0.5 Fibonacci from this rally. Bearish cross, 20% drop right to the Fibonacci zone. And then over here, we had another leg up through this market. And we saw it coming up here, 35% correction down after that bearish cross. Another one here. We had our big rally up. So we had our bearish cross. Same thing. Same warning signals that I'm telling you guys about over here. If we experience that bearish cross, we're really going to need to watch what happens. But you can see, again, coming back to that 0.5 Fibonacci zone. So pretty interesting to actually see kind of each rally coming back to the 0.5. So if we look at that from the current price action, this is what I'm looking at. You know, we see from our peak down to our 0.5, looking at about a 21% correction, which would coincide with similar corrections in the past, similar setups. So it's something we have to be aware of. That is the potential. If we break below this 200-day, similar to what we saw over here, broke down, bearish cross, retest, failed to break out, rejected, downtrend. Same thing over here, bearish cross, tried to break out right through here to gain it back a little bit, but ultimately just bleeding down through there. Same thing through here, bearish cross, broke below our 200-day, rejected into resistance down to the 0.5 Fibonacci. So that's what I'm paying attention to right here as a potential to play out. For that reason, you know, I'm not really interested in any stocks right now, because if the SPY is going to continue trending down, it's going to take all the stocks down with it. It's going to take Bitcoin and crypto down with it. That's why I'm just sitting on my hands. It's not worth the risk to me. You know, I've been kind of in this market for a lot of years. I kind of learned that patience really pays off, and focusing on wealth preservation first and foremost, and then wealth growth second. So you can't grow what you lose, and yet the way to lose your money is essentially buying into overheated markets up here, getting caught in the downtrend, and then capitulating down here because it's all you can stomach. You know, you think it's just going to keep going down forever, and then the markets reverse to the upside. So everything I teach you is to stop us from buying up here and selling down here, and rather waiting and buying down here and then riding that trend back up to the next highs. So it's hard to hear for a lot of people. It's hard to be patient, sit on your hands. But in all the years that I've spent investing, essentially it's one of the most important lessons that I have learned. Patience, more often than not, pays off. There's always going to be an undervalued asset somewhere. There's always going to be investment opportunities. You don't have to rush into anything risky because you think it's the only opportunity you're ever going to have to make money. That's how you kind of invest based on emotion. It's how you get caught on the wrong side of the trade, and then it's ultimately how you're going to kind of it's going to just mess with your mind, and you're going to end up selling a lot lower, and then ultimately the market will reverse and make you wish that you hadn't sold and make you buy back in higher. So it's all about playing with your emotions, but we do recognize the risks in the market. You know, we don't pay attention to just one specific side of things like this. That is important to watch these, and as long as these haven't flashed and we're maintaining decent structure in terms of our SPY, so if we're able to hold the 200-day, get back above that 50-day and hold it as support, then who's to say that we can't go on another leg up in the market if the trend structure supports it and the indicators support it. So all the stuff that we watch, the same things that helped us de-risk before this, 6% correction in the SPY, 20-30% correction in Bitcoin, we're able to avoid it, protect our capital, realize profits, and then prepare ourselves to be able to take advantage of the opportunities as they come. So that's all I kind of want to talk to you guys about today, is really focusing on that patience, managing that emotion, and then the opportunities will come to us, but we need to have capital when those opportunities come to take advantage of them. So if you like the content, if you learned something new, please like, share, subscribe. It all means the world to me, and I'll see you guys in the next one.